Hey guys, so my name is Alvin and I am a 18-year-old student currently living in Australia, and I'm also currently also studying trading because I think it's a cool thing to learn, So yeah, I've been learning trading for 6 months now, and I think it's a really cool thing to get into. It's like a skill that that'll I think more like you can see the like impact it can give to your life more often, or like more easily, and that's why I like it so much. And yeah, so I've been doing paper trading for a while now, and I was thinking, I figured, I just recently got a job. I think it's like a good time to also start a prop firm challenge and see if I could pass it, because even like the way I think about it is like the prop firm challenge is like a learning experience, and I'm paying for the lesson, so it's like a very expensive lesson, you could say. So yeah, I'm doing the top step prop firm challenge, and my goal is to pretty much pass the account. I'm using this channel as like a form of journaling. It's like a way of keeping me consistent, because I know like these types of videos don't like do very well on YouTube, but I figured I might just do it anyways, just because it's a fun thing to do, and it's like another way of keeping me accountable, which I really like, because I do want to be more disciplined with this trading thing, especially now since I'm doing the prop firm challenge. I want to be more disciplined and focus more in on it, So pretty much I'll just do a review of all the trades I took, and then my stats for the week, and then post like a final review of the week, just seeing like what I learned, and then see what my like worst mistakes, my best mistake, not best mistakes, but like my best plays, and then see, it's like a good way to know what I need to improve on, so yeah, that'll be something you can see at the end of the video. But yeah, so I'll get into it, and stop yapping. So yeah, alright, so for Monday on the high time frame, there were some imbalances that I noted down, like this 4-hour BPR here. A BPR is pretty much an overlap of fair value gap, so there was this fair value gap here, and there was also this fair value gap here, which I used to list out this 4-hour BPR. And this 4-hour BPR was the area where I wanted price to reverse into the weekly gap that was formed during the weekend, and also this 4-hour order block. I wanted price to come down to this level and then continue pushing up. So I was pretty bullish for today. There was no news for today either. There was only German IFO business climate for Euro, so that wasn't very relevant to the pair I trade, which is NQ. And pretty much what happened was I wasn't fully this was my mistake, where I wasn't fully in the moment when I was taking this trade. I was so interested in this 4-hour BPR like level, and I wanted this to happen. I was so interested in being right that I didn't notice this newly formed like 15-minute order block, and also this 1-hour order block here, where price came into it like these fresh new imbalances, and then tapped into an overlap right here, and then that would have been the better entry down all the way to the low resistance liquidity that I wanted to target, as well as these key imbalances, because originally I wanted to take shorts from this BPR down to the low resistance liquidity, which it ended up happening, but not the tap into the 4-hour. It tapped into the 15-minute plus 1-hour order block overlap, and that's something I could improve on, because I think that's something I struggled with quite a bit It was just I like to predict it instead of being fully immersed into the trade and being able to point out all the new imbalances. I can do it later on, but like I do struggle when I do it forward testing, you know. And I would have had my final take profit around the top of this low resistance liquidity, just because I could expect the fake out, since after it taps into these key levels it could reverse and run bullish, which is what I was also expecting. And pretty much my friend explained this to me, which is a fake out. This is what he called it. I guess he developed it himself, and he pretty much told me the low resistance liquidity concept, where a fake out is pretty much price will come into the low resistance liquidity level, sweep out roughly around 50% of it, and then just completely reverse and liquefy people, which ended up happening. He backtested this quite a bit, and I have noticed it in my trades as well, so I do have confidence that this is something that does happen. And usually what happens later on is that price comes down and then fully takes out these low resistance liquidities later, which it ended up happening a few days later. And yeah, it was pretty much a very rookie mistake from me where I wasn't fully in the moment, but I am glad that I did read what would happen correctly. This is my this technically is my first day of the funded account, so I am glad that technically I did read it correctly, but I also am glad that I know what I did wrong, so I can improve it later on. So yeah, that is pretty much one day. Yeah, I did quite a bit of writing for it, where I wanted to, where I was pretty much waiting, and I even noted down these like new imbalances, like this right here. There was a 15-minute fair value gap that price tapped into, and I didn't enter. This was the exact same one that I just pointed out, and I didn't do anything about it because, you know, I was just stressing since it's the first day, you know what I'm saying? So for Tuesday, there was quite a lot of news on Tuesday. So you can see there's S&P like composite, the orange folder. We have a Richmond Manufacturing Index at 159, and at 2 we have CB Consumer Confidence, yeah, and new home sales. Then we got we got FOMC at 6 a.m. Yeah. So pretty much what happened today, I was going to wait and then see if I can take a trade in between these two periods, which ended up not happening. I did take a break-even trade, so I entered during the chop fest, and there were quite a lot of things I got wrong, so I'll go over that right now. So for today, there was the same 4-hour BPR that I talked about on Monday, right here. This was the 4-hour BPR, and what I wanted again was the same thing, where it was bearish down to the high time frame imbalances instead of the weekly gap. So I wanted to take a bear from pretty much the 4-hour BPR down to these imbalances here, more to this 1 hour, just because of these equal lows that are present here. And I would have seen news create these equal lows, and I would know that like price would want to target it. So what I did during Tuesday was I tried to enter long for whatever reason. I was pretty sure because I saw that price was overall moving in a bull trend, so I wanted to continue in the bull trend and see a disrespect of this 4-hour BPR, since price had already revisited this imbalance before, which ended up not happening. Price ended up chopping, which I think it is a mistake on my part for entering in the first place, because there was no confirmation for bull. If there was, then I would have entered past the 4-hour BPR, possibly to the retrace into the 4-hour BPR, then going up, but there wasn't. So that was my mistake. And also, since there was a FOMC meeting later on in the day, there's obviously going to be less volume overall, or price is going to chop around a lot because people are going to be preparing for news. Some people like trading on news, so they just volume usually dies out during pre-news. Yeah. So yeah, I wanted bull, and it ended up being a stall fest, more towards bear, down to these equal lows. I saw on the 5-minute as well that this is what I noted later on, where price failed to break, where technically it did break. It did form above the imbalance, but it was very, very small, small to the point that you wouldn't consider it a break. And then it came into it again and then tapped in, didn't break past again, and then price came down and it came up, revisited, and honestly I could have targeted these equal lows from this retracement, which I didn't do. But looking back, that's what I thought I should have done. Price actually took it out during FOMC, but I would have taken my position out during FOMC because I don't like trading during news. It's too much of a gamble, I would say. So yeah, that was Tuesday. Alright, so for Wednesday, this was the trade that I took. Actually for Wednesday, I actually ended up closing the trade early. I closed it around when price was coming down, just because I was afraid. Okay, today was the day I watched a video on SFTs and tried to learn it, and because of my unconfidence of using a new Confluence, I ended up not taking the trade, and I ended up closing the trade, which, looking back, is pretty stupid, because there were Confluences to back up this move as well, like the LRLs, the high time frame imbalances, tap in into push down. But yeah, I saw this SMT here where on NQ price had swept out this key level, or like I guess ERL, and on ES actually hadn't yet, so I could take shorts down to this key level and perhaps even lower. And there was more price, as you can see, price ended up taking quite a lot of the LRLs, which was really nice. It was some pretty nice price action, and it did what I wanted to do after as well, which was push up bullish, because my initial analysis on NQ was for price to sweep out the key level and then continue pushing up. So yeah, there was quite a lot of news today as well. There was all these, because these are the ones that are present during my trade, even though it's Thursday. Technically I took the trade like early Thursday, late Wednesday. That's why I listed it as Wednesday, because it's Wednesday for US. But yeah, there was a lot of news tonight, so I had to wait for it to pass, and I ended up taking this trade after I entered after all the news passed. And yeah, I feel like I should have just kept it in, because I mean, obviously the obvious reason is because it hit my TP, but other reasons are like what was it, it's better to forward test and then learn that way, in my opinion, because then, I mean, if I get burned by it, then I'll have more drive to figure out why did I get like done over so hard, you know. But yeah, this was my Wednesday trade. Alright, so for Thursday, what I was expecting for Thursday on the high time frame was for price to come up into these higher time frame imbalances and then push down off that, which it did happen. I was expecting price to come up to this, specifically this 1 hour and 4 hour order block overlap, and that did end up happening, so that was pretty nice. But I took a bullish trade up to this 15-minute fair value gap, just because this day was the day I also did my review for Monday, and in my review I was thinking how I wasn't being in the present enough. More specifically, like I'll be predicting a trend or like a trade that I can take, but then that trade happens in the PM session. That's been happening quite often recently. So I was thinking I'll take the bullish trend that is going to happen just before the bearish trend. So I took profits at the 15-minute just because one is just to secure profits, and two is since I reckon that price would tap in and then push down, and which it did happen, yeah. So the trade was on the lower time frame. My trade was pretty much a retrace into this order block here. So yeah, and then take it up to, I had my stop around the bottom here, and then or something like this. Wait, I'll give it a check. Wait, no, sorry. I had my entry around here, and then I had my stop loss around this low here, and yeah, that gave me a roughly 1.3. That's it's off because the initial trade I'm pretty sure was a bit lower, but this was the trade I took. Since it was bank holiday, I figured also there'd be less volatility, so I aimed for an easier trade, pretty much. So yeah, that was Thursday, so it was pretty decent overall. Like it was a pretty small trade, but it was a good one, I would say. For Friday, I took this trade right after getting back from work, so that probably affected my mental a little bit because, you know, I work as a waiter, so it's a bit tiring, you know. But pretty much today, what I was thinking was price was going to come up, sweep out. Since it swept out the buy side ERL, I figured it would push down and then take out lows before pushing up again, because it was within these high time frame imbalances, like this 1 hour fair value gap. On the 4 hours within, you know, another 4 hour fair value gap as well. I had order block, so that's why I was thinking I was gonna run bearish, and I was thinking, oh yeah, since it's gonna run bearish and then reversal afterwards, I'll take the bearish during pre-market, because I was still thinking of mastering being in the present, so taking the trades that are right in front of me. And I did end up taking, I took two technically. I had one that was listed out, so I actually did these trades on ES because I saw an SMT. So the price had swept out on ES, but I hadn't swept out on NQ. So if you can see, like here swept out on ES, it swept out here, and then here was also swept out later on. So the first one, it was actually a mistake on my part. I was thinking that price would come up to this point in the 1 hour order block. I put this entry here because I wanted like the best possible entry, which is kind of like my old way of thinking, where price will want to take the best possible direction, or like the best possible move after overall, and that's what the banks are aiming for, so I'll aim for that as well. But that ended up not happening. Price ended up just tapping into this 1 hour order block, and also this 1 hour order block that was formed later on, and that it was formed during the trade, and I did note it down before, like as a possibility, but then I never actually like committed to it, which was a mistake on my part. That was the mistake, because price ended up making equal highs on like the low time frame, like the 1 minute. You can see price made equal highs and it failed to break past it. And then I was saying in my head that, oh yeah, I'm going to take bearish if price fails to sweep out these equal highs, which, I mean, price failed and then it went bearish, but I didn't enter because I was unconfident. So after this, where I missed out, I was still feeling alright. So I was like, okay, so if price sweeps out on NQ, which it did, I'm gonna continue this like bearish trend down to the this ERL here, because these two line up. If you can see, oh yeah, these line up. So yeah, where I wanted to enter was this retrace into the 5-minute, and I ended up losing this trade. So I figured, okay, since I took some time off the charts, and then I came back and I saw, oh yeah, it's tapping into this order block right now, and it almost slipped out on ES. So I figured, oh yeah, we can go for bearish down to this low here. And since like the previous few times where I tried out SMTs and price had swept out on NQ and then later on ES, I figured it would be, I had more confidence in it pretty much. So I took a market entry, so it was kind of around like this point here. It wasn't a very good hour, it was like 1-to-1. And I entered, and price came into drawdown instantly to the one into this 5-minute, and also there was like a 3-minute fair value gap that I was within as well, yeah. And price came up, respected it, came down. It also respected the 3-minute, it formed past it, but then afterwards price just shot up, which I didn't expect, because I thought, you know, since it's a pretty easy, like, I thought it would be pretty easy to win this trade since it was already so close to it. It's pretty much guaranteed, but that didn't end up happening, which I will believe. Like, this entry was also like a bit FOMO-y in my opinion, just because like I didn't wait for the retrace fully. I just entered shorts because it was like, you know, bouncing around. You can see the wicks here, and which I didn't really like. I don't like now looking back on it. It doesn't respect my plan in that sense, and that is something that I will need to work on. I will say it does feel a lot different, like the fun, I guess, prop firm challenge compared to paper, because there's actual risk involved and there's a possibility that I lose, you know. Whereas on paper I just win overall. Not win overall, but like I don't have the possibility of blowing an account, you know. And yeah, so this is something I need to review more, because I still don't fully understand why it didn't sweep out. I will say, I guess price on NQ was already, like, you could say respecting the uptrend. So you could say that NQ became the lagging index, and then ES was the one that already started the uptrend, and then NQ lagged behind, and then you could enter bull later on NQ. And it did go pretty bull later on, but I didn't take the trade because I took the 2 trades I could take today. Like, I didn't want to take any more trades because of my emotions from the second one. So yeah, that was Friday. It was, I mean, so far like the worst day overall, but it's alright. It's like I'm only I entered with more contracts on this trade. Actually, I entered with more contracts just because I figured the possibility of winning this trade was pretty high, and I had confidence in it. So, you know, I figured since if I risk my usual free contracts, that'll mean like the profit's gonna be like $50, because the amount of pips it moves is like very little. But looking back, I shouldn't switch like my contract size. I mean, I can lower down my like risk, but I feel like I shouldn't up my risk, you know. So that's a lesson I learned from today. So yeah, that is Friday. Yep. Alright, so here is my stats for the week. So you can see I took a loss of $122.81. Most of it was because I upped the contract size on Friday, so I'll make sure not to do that in the future. And yeah, most probably Thursday, $50. Least probably Friday, 188. And a lot of the trades this week were I entered very badly, so I exited them at break even. And yeah, that will be something I need to work on. I definitely need to improve my entries, my just reading the chart in general, and then like what I was saying during the reviews where I needed to be more in the moment. That's something I realized on Thursday, and Friday I completely threw that out the window technically. I mean, not really, but it could have definitely been better. So yeah, this is my stats for the week. Alright, so for the week I was thinking that yeah, this week could have definitely been a lot better, but it was pretty alright for the first week. Yeah, I struggled with FOMO a little bit on the last day, which was pretty unfortunate, but I figured, I mean, the usual like being patient while calm, that's like one thing that I still need to work on. That's something that I think I'll be working on for quite a long time, because perfecting that can take quite a while, you know. And with predicting the market, because this is the thing I learned from Thursday, where I watched a video by Justin Werlin. I'll attach the video below in the description or somewhere. I'll figure it out, but pretty much he was talking about how there was this quote from the video where I really liked it, and I figured it could help out a lot of people, where the goal of trading is not to predict the future but to master the present. That is something that I quite liked a lot, so I noted it down and I implemented it on Thursday, where instead of taking the bearish move after waiting for price to move up, I instead just took the bull move up to a spot where I was very confident that price would hit, and it was based off of the current confluences that were popping up, and then price was like respecting those confluences and continuing in higher highs and higher lows. So that's why I was so confident in it, and I think that's like that was the day where I think it worked the best. And this is something that's like not really related to trading, but I remembered this from a manga I read called Blue Lock, where they were talking about seeing, thinking, and reacting. But what I was thinking was that this was kind of relevant to what Justin was saying, where you want to see the market first, like to see the condition, if it changes or not during market open, or like when you're trading, and then seeing the current confluences that are popping up, the freshest ones, so that pop up, and then see if price reacts, or see how price reacts of those imbalances. And then thinking, so pretty much a continuation of the previous one, where you think about, oh yeah, why is price doing this, why is price doing that, you know, why is it disrespecting, is there other confluences that could justify this? And then reacting, which is either taking the trade or not taking the trade, you know. So yeah, I think this is something that was pretty nice as well. And yeah, like I said before, being patient while calm while trading, that is something I think everybody would know, because that is something that it's kind of just general logic, where you obviously want to be like the calmest you can be when taking the trades, because then you'll be at your peak performance. Yeah, and yeah, so I'm happy with the lessons I learned this week. I definitely think they'll like improve me a lot as I grow as a trader, and I think if I continue and like develop these things, these areas that I am lacking in right now. I think I'll definitely become a very good trader in the future. So yeah, thank you for watching this week's review, and yeah, thank you.